Sit down, Vivian. There's something we need to discuss as a family. That's how it started. Not with shouting, not with tears. My father said it the way he announced quarterly numbers to store managers, flat and procedural, while my mother slid a navy blue binder across the dinner table like she was passing the salt. The binder had a label printed in Times New Roman, centered, laminated so it wouldn't smudge. Statement of account. Cost of raising Vivian Lockhart, 1994 to 2012. Below that, in smaller font, a single line that I would replay in my head for months afterward. Balance due, with accrued interest, $618,742.19. If you have never had your own childhood itemized like a hardware store invoice, you don't know what it feels like to sit across from the people who made you and watch them calculate, to the penny, what you cost them. Braces, $1,100. Summer camp, 4 years, $6,200. Private piano lessons I begged them to cancel by age 9, $2,900. College tuition, the largest line item, $211,000. Even though I told them 100 times across a decade that I covered the gap myself with 2 scholarships and 3 jobs they never once asked about. They had rounded every number up. They had compounded interest at 4% annually, as if I were a defaulted mortgage. And they had done it on my 32nd birthday, 4 days after I was promoted to senior forensic auditor at a firm that investigates exactly this kind of document for a living. I want to tell you that I laughed. I didn't. I sat very still the way I'd learned to sit still in that house since I was 7 years old, and I asked one question. Why now? My mother answered before my father could. Theo needs help with the store conversion, and we think it's only fair that the family carries this together. You've always been the responsible one. There it was. The sentence that had defined every year of my life before I understood what it cost me to hear it. To understand why a binder full of fake debt didn't destroy me that night, you have to understand the 10 years that came before it, because those 10 years were the real audit, the one nobody asked me to run. The one I built quietly, methodically, one bank statement and one public record at a time. While everyone in my family assumed I was simply too busy with work to come around as often as I used to. I grew up the second of 2 children in a house in the suburbs of Columbus, Ohio, in a family that owned a chain of mid-sized furniture stores called Lockhart Home and Hearth, founded by my grandfather in 1968 and inherited by my father in 1991. My brother Theo was born 3 years before me, and from the moment I have any memory at all, the house operated on an unspoken hierarchy. Theo was the future. I was the insurance policy. He got the photographs on the mantle, the graduation parties with rented tents, the new car at 16. I got told, more times than I can count, that I was lucky to be so capable, because capable children didn't need as much attention. Capable was the word they used instead of invisible. It took me until my 20s to translate it correctly. When I was 11, Theo wrecked a neighbor's mailbox with our father's truck and was grounded for exactly 1 week, a punishment that ended early because he had a travel baseball tournament. When I was 11, I forgot to feed the dog one evening because I was finishing a science project, and my father sat me down and explained, in full sentences, that trust was something you earned and I had just spent mine. I remember thinking, even then, at 11 years old, that the math didn't add up. It wouldn't be the last time I noticed that the math in that house didn't add up. It would simply be the first entry in a ledger I didn't know yet that I was keeping. There's a specific memory from when I was 13 that I think about more than almost any other, not because it was dramatic, but because it was so small that nobody else in the room even registered it as a moment worth remembering. It was a Sunday dinner at my grandmother's house, the kind with 12 people crowded around a table built for 8, and my uncle, half joking, asked my father which of his kids was going to take over the business someday. My father didn't pause. He said, Theo, obviously the boy carries the name forward. Then, almost as an afterthought, as if remembering I was sitting 4 feet away, he added, and Vivian will do something with numbers. She's good with numbers. I was 13 years old, and in a single sentence, my entire future had already been assigned a category. Not a dream, a function, something with numbers. I didn't cry about it that night. I just filed it away, the way I filed everything away and went back to my plate. By high school, the pattern had calcified into something so normal I stopped questioning it out loud. Theo's tutoring, his car insurance, his clothes, all paid without comment, without spreadsheets, without conversation. When I asked for a $40 graphing calculator for AP Calculus, my mother told me to ask my guidance counselor if the school had a loaner program. I did. They didn't. I bought it myself with money I earned bagging groceries on weekends. The same job that taught me at 15 how to reconcile a cash drawer to the penny. A skill that would matter far more later than anyone in my family could have predicted. I want to be precise about something because precision is the entire reason this story ends the way it does. I am not telling you my parents were monsters who beat me or starved me. They weren't. I had a roof, food, clothing, a stable address. What I did not have was equal investment, equal trust, or, as it turned out, equal honesty. And the gap between those two things, between adequate and honest, is where this entire story lives. When I was 17, my grandmother, my father's mother, a sharp, quiet woman named Eleanor Lockhart, who had watched the family dynamic with her own eyes for 2 decades, called me into her sewing room one afternoon and told me she was setting up something for me. She didn't explain details. She just said, "I see you, Vivian, even when they don't. And I want you to have something that's yours, something nobody can spend on your brother by accident." I didn't understand what she meant until I was 26 years old, and the document finally crossed my desk, by accident, during the worst week of a totally unrelated job. There's another memory, smaller still, that I think captures the whole architecture of that house better than almost anything else. When I was 16, I made a regional finalist round in a statewide accounting and business competition for high school students, the kind of thing that looks good on a college application, and meant to me at the time almost everything. My mother attended Theo's baseball games every single weekend that same spring, driving 40 minutes each way, packing coolers, organizing carpools for his teammates. She did not attend my competition. She told me, when I mentioned it afterward that she hadn't realized it was that big a deal, business things all sort of sounded the same to her. I placed 3rd in the state. I told them the number because I genuinely thought it might change something. It didn't. Theo's batting average that season was discussed at dinner for weeks. My placement was mentioned once in passing by my father, who used it to make a point about how I should consider business school instead of, in his words, something with less practical application. I didn't ask what he meant by that. I already knew. College I funded almost entirely myself. I took out the loans my parents told relatives they were covering. I worked the front desk of a campus gym at $11 an hour and a second job tutoring high schoolers in algebra. And I won 2 competitive scholarships, one from a regional accounting society and 1 merit award from my university, totaling $41,000 across 4 years. My parents claimed at every Thanksgiving, every reunion, every conversation with aunts and uncles that they were proudly paying for my education in full. I let it go for years. I told myself it didn't matter who got the credit, since I was the one actually building the life. I was wrong about that too. It mattered enormously because credit in a family is currency, and currency eventually gets spent. I graduated with a degree in accounting, sat for the CPA exam while working full-time, passed on my first attempt, and within 4 years had also earned my certified fraud examiner credential, a designation that exists for one specific purpose: to train people to find money that someone is trying very hard to make invisible. I did not choose that specialty by accident. Some part of me, even before I had language for it, had spent my entire childhood watching numbers that didn't reconcile, and I wanted to become the kind of person who could finally make them reconcile. The accident that cracked everything open happened when I was 26. My grandmother had passed 2 years earlier, and I was helping my mother sort through an old filing cabinet in the garage that the estate attorney had asked us to clear before the house sale closed. Inside a folder labeled simply EL Trust, behind insurance documents and old tax returns, I found a single sheet of paper that didn't belong to anyone but me. It was a trust account statement, dated 1997, establishing an irrevocable trust in my name, funded initially at $50,000 by Eleanor Lockhart, with my parents listed as co-trustees, scheduled to vest in full when I turned 25. I was 26. Nobody had ever mentioned this trust to me, not once. Not at 18, not at 21, not at the funeral, not after. I didn't say anything that day. I photographed the document with my phone, slid it back into the folder exactly where I found it, and drove home with my hands tight on the steering wheel the entire way, doing math in my head that I would later do properly. With software, with subpoenaed records, with a forensic accountant's full toolkit. That drive was the real beginning of this story. Everything before it was a childhood. Everything after it was an investigation. I want to walk you through what I found over the following years, not because I want sympathy, but because I want you to understand exactly how thorough you have to be before you confront a family that has spent decades controlling the narrative, and exactly how long it takes to build a case that cannot be argued with, only accepted. The first thing I did, 8 months after finding that document, was request my own credit report and full tax transcripts from the IRS, going back as far as the agency would release them. This is a right every adult has, and very few people exercise it, because most people assume their own financial history holds no surprises. Mine held 3. The first surprise was that my parents had claimed me as a dependent on their federal tax returns for 2 additional years after I'd filed my own independent returns and earned above the dependent income threshold, which is not simply inaccurate, it is tax fraud, a federal offense that the IRS treats with escalating seriousness for repeat occurrences. The second surprise, far worse, was a personal loan opened in my name in 2011, the year I turned 20, for $14,000, originated through a regional credit union I had never personally banked with my social security number, my date of birth, and a signature that was not mine. I was 20 years old, living in a dorm room 4 hours away when that loan was opened. I requested the original application from the credit union under the Fair Credit Reporting Act. The mailing address on the application was my parents' house. The forwarding bank account for the disbursed funds was a business account belonging to Lockhart Home and Hearth. The third surprise was smaller in dollar terms, but somehow cut the deepest. One of the 2 scholarships I had won in college, the Merit Award from my university, totaling $6,000 per year for 4 years, $24,000 total, had not been disbursed to me as a tuition credit the way the award letter described. I had simply assumed as an 18-year-old that scholarship money worked invisibly behind the scenes, deducted from a tuition bill I never closely audited because I trusted the institution. It took me a single records request to the university bursar's office years later to learn that the scholarship had in fact been disbursed as a refund check, mailed quarterly to the address on file, which was, again, my parents' house, where I no longer lived after sophomore year. 4 years of refund checks, $24,000, endorsed and deposited into an account that was not mine. I want to pause here and say something about what it actually feels like to discover that the family who raised you may have systematically used your name without your consent, because I think people imagine it arrives as a single dramatic gut punch. And in my experience, it doesn't. It arrives in installments. You get one document and you tell yourself there's probably an explanation. You get a second document and the explanation gets harder to construct. By the third, you're no longer looking for an explanation at all. You're simply recording. That shift from explaining to recording is the exact moment a daughter becomes an auditor. And I remember the night it happened to me with uncomfortable clarity. Sitting at my kitchen table at 1 a.m. with 3 printed statements spread out in front of me, feeling less like a betrayed child and more like a professional who had just opened a file she could not, in good conscience, close. I sat with that information for a long time before I did anything with it, because the professional in me knew something the hurt daughter in me wanted to ignore. A single discrepancy is a mistake. A pattern sustained across more than a decade with deliberate routing of funds is something else entirely. And you do not confront a pattern like that with an accusation. You confront it with a complete, certified, indisputable record. So that's what I spent the next several years building, on nights and weekends, in the margins of an already demanding career. The way you build anything that actually matters, slowly and largely alone. I requested archived bank statements directly from financial institutions, using formal written requests, which is slower than people expect, often taking 6 to 10 weeks per institution, particularly for records older than 7 years that have moved to microfiche or cold storage. I filed public records requests with the county recorder's office for property liens and UCC filings, the kind of paperwork businesses file when they use assets as collateral, and found that Lockhart Home and Hearth had, in 2014 and again in 2017, used a trust account. The same trust my grandmother had created for me as collateral backing for 2 separate business loans, without my knowledge, without my signature, and without my consent, because as co-trustee, my father did not legally require either. I cross-referenced trust account statements against store financial filings that, as a closely held but not fully private company, still required certain disclosures through the state's business registry. I built a full reconciliation, the kind I would normally build for a client, except the client this time was simply the truth, and the subject of the audit was my own family. By the time I turned 30, I had a complete, chronological, source-documented account of exactly what had happened to the trust my grandmother left me. The original $50,000, compounded conservatively at the trust's own stated investment return of roughly 6% annually, should have grown over 15 years to approximately $119,000 by the time I turned 25 and the trust was scheduled to vest. Instead, the account held, as of the most recent statement I was able to subpoena through a trust attorney I had quietly retained, an actual balance of $1,200. $1,200 out of what should have been $119,000. The rest had been withdrawn across 19 separate transactions over 13 years, every single one authorized by my father's trustee signature, routed in patterns that matched almost exactly the timing of Theo's car purchases, Theo's first failed restaurant venture in 2016, and 2 of the 3 store renovations Lockhart Home and Hearth had undertaken during that period. I had by then retained an attorney who specialized in trust and fiduciary litigation, a calm, exact woman named Patricia Soto, who reviewed every document I had gathered and told me something I will never forget. She said, "Vivian, in 11 years of practice, I have seen families do a lot of things to each other. I have rarely seen a case this clean. Most people who do what your father did leave a mess. He left a paper trail because he never imagined you'd look." I had by then retained an attorney who specialized in trust and fiduciary litigation, a calm, exact woman named Patricia Soto, who reviewed every document I had gathered and told me something I will never forget. She said, "Vivian, in 11 years of practice, I have seen families do a lot of things to each other. I have rarely seen a case this clean. Most people who do what your father did leave a mess. He left a paper trail because he never imagined you'd look." Patricia was methodical in a way that matched my own instincts almost exactly, which is part of why I trusted her immediately. She didn't let me move a single step faster than the documentation could support. When I brought her the credit union loan application, she told me, before we did anything else, that we needed a certified forensic document examiner to formally compare the signature against verified samples of my own handwriting from the same period, because a daughter's word against a father's signature would never hold up the way an independent, credentialed comparison would. That examiner, a retired document analyst named Howard Rice, who had spent 22 years testifying in court cases involving forged signatures, completed his comparison within 3 weeks and concluded with what he described as a high degree of confidence that the signature on the 2011 loan application did not match my own handwriting samples in 11 separate identifying characteristics, including letter slant, pen pressure patterns, and the formation of my distinctive lowercase v. I kept his report in the same binder as everything else, Exhibit 7, because by then I had stopped thinking of any of this as personal. I had started thinking of it as a case file, which, in hindsight, was the only way I could have gotten through it without losing myself completely in the process. That was the truth at the center of everything. They never imagined I'd look, because I was the capable one, the quiet one, the one who didn't make waves. And people who build their entire family strategy around a person's silence forget that silence and blindness are not the same thing. So when that binder slid across the dinner table on my 32nd birthday, demanding $618,000 for the cost of raising me, I did not feel panic. I felt something closer to relief, the specific relief of a person who has been waiting years for a door to finally open, because I had spent 3 years preparing for exactly this moment, and I simply hadn't known when it would arrive. I took the binder home that night. I did not argue at the table. I told my parents I needed time to review the figures, which made my mother visibly relax, because in her mind, reviewing meant agreeing eventually, the way I had agreed to nearly everything my entire life. I let her believe that for 6 weeks. During those 6 weeks, I finalized the document that would become the centerpiece of everything that followed. A forensic report I titled, Deliberately, in the same clinical language they had used against me. Statement of account, Lockhart Family Financial Reconciliation, 2003 to 2024. 41 pages, 11 labeled exhibits, bank statements, trust filings, the credit union loan application with its forged signature flagged by a certified document examiner I had retained specifically to authenticate it, the university bursar correspondence, the IRS transcripts, the property lien filings, all of it cross-referenced, dated, and sourced. The opportunity to present it arrived sooner than I expected, and far more publicly than I had planned, which in hindsight made everything land harder than I could have engineered myself. 6 weeks after my birthday, Lockhart Home and Hearth held its 50th anniversary gala, an evening event at a rented hotel ballroom downtown, attended by roughly 120 people, extended family, longtime employees, 2 regional business partners, the company's outside counsel, a local business journalist who had been invited to cover the milestone, and central to the evening's planned program, a formal announcement that Theo would be taking over as the company's next chief executive, effective the following quarter. I knew, because my mother had mentioned it almost casually 2 weeks prior, that there was a second item on that evening's private agenda, scheduled for after the public toasts, in the smaller adjoining room reserved for family and senior staff. They intended to ask me, in front of that smaller group, to formally release a portion of my eventual inheritance early, framed as my contribution to securing Theo's transition and saving 2 underperforming store locations from closure. They intended to use the $618,000 invoice as the opening argument. Pay back what you owe from your childhood, or step aside and let the family handle this without you. I attended that gala with my 41-page report printed in 12 identical bound copies, sitting in a leather portfolio bag I had not opened all evening, while I smiled through toasts and let my aunt photograph me beside the anniversary banner. When the smaller room convened, my father stood at the head of the table and opened with almost the exact words from my birthday dinner. We're a family, and families carry each other. Vivian, we'd like to discuss settling the account we presented to you. The smaller room was the kind hotels use for overflow meetings. Beige walls, a long conference table, water glasses already sweating in their condensation rings under the recessed lighting, the muffled sound of the anniversary band still playing 2 rooms away. 14 people sat around that table, not 12, because at the last minute my Aunt Carol, my father's younger sister, had been asked to join, presumably as a sympathetic voice for the family's position. And the company's regional distribution partner, a man named Don Whitfield, who supplied roughly 40% of Lockhart Home and Hearth's inventory, had been included because the anniversary weekend doubled as a renewal discussion for his contract. When my father stood at the head of the table and opened with almost the exact words from my birthday dinner, "We're a family and families carry each other. Vivian, we'd like to discuss settling the account we presented to you." I noticed Don Whitfield glance at his watch, the universal gesture of a man who thought he was about to sit through 10 minutes of sentimental family business before getting back to actual numbers. He had no idea yet that he was about to get exactly that, just not in the direction he expected. I stood up. I distributed 12 copies of my own report around that table, 1 to each person present, including the company's outside counsel and the journalist, who I had specifically and deliberately not excluded, because sunlight, I had learned by then, was the only disinfectant that worked on people who had spent their lives controlling a private narrative. I told them I would not be paying the $618,000 they had calculated for raising me. I told them that figure, as presented, ignored every dollar I had already paid into this family's accounts without my knowledge or consent, and I asked everyone at the table to turn to page 4 of the document in front of them. Page 4 contained the trust reconciliation. I read it aloud, clearly, the way I would present findings to a client's board, because that is exactly the register I needed. Calm, factual, unshakable. I explained that Eleanor Lockhart had established an irrevocable trust in my name in 1997, funded at $50,000, which should have vested at approximately $119,000 when I turned 25. I explained that the actual remaining balance, as of the most recent statement, was $1,200, and that 19 documented withdrawals over 13 years, each authorized by my father's trustee's signature, accounted for the difference. I watched my father's face while I said it. He did not deny it. He simply went very still. The same stillness I had learned from him at the dinner table my entire childhood. Except this time the stillness belonged to him, and everyone in that room could see it. I moved to page 11, the credit union loan. $14,000 opened in my name at 20 years old while I lived 4 hours away. The funds routed into a business account belonging to Lockhart Home and Hearth. The signature on the application authenticated as not mine by a certified forensic document examiner whose credentials I included as an appendix. I told the table that I had not authorized that loan, had no knowledge of it until I requested my own credit history at 26, and that opening a loan in another adult's name using their identifying information without consent meets the statutory definition of identity theft in the state of Ohio, a 4th-degree felony, with no statute of limitations exception for family relationships. I moved to page 19, the scholarship refund checks. $24,000 across 4 years, mailed to an address I had not lived at since sophomore year, deposited into an account that was not mine. I moved to page 26, the 2 additional years my parents had claimed me as a dependent on federal returns after I no longer qualified, a pattern the IRS classifies when sustained and repeated as a federal filing violation subject to penalty and, in cases involving deliberate concealment, criminal referral. And then I turned to the final page, the one I had built specifically for this room, the one I had titled in the exact format they had used against me. Statement of account. What is owed to Vivian Lockhart? I listed the trust shortfall with conservative compounded growth, $117,800. The unauthorized loan, $14,000. The diverted scholarship funds, $24,000. Estimated tax liability exposure created in my name by the false dependent claims, which my own accountant had calculated, $6,400. I did not add interest. I told the room I had decided after careful thought that compounding interest against your own family, the way they had compounded it against an 11-year-old's perceived debt, was a choice I was not willing to make, even though I legally could have. The total, without interest, came to $162,200. I told them that figure was not a demand. It was simply, finally, the truth, documented the way they had tried to document mine. The room did not erupt. That's not how rooms like that actually behave, despite what you might expect. It went quiet in the specific way a room goes quiet when 12 people are simultaneously doing math they cannot stop themselves from doing. The outside counsel, a man named Greg Avery, who had represented the company for nearly 2 decades, set his copy down flat on the table and asked, in a careful, lawyerly tone, whether I intended to pursue this through litigation or through the appropriate regulatory bodies. I told him the truth because by then there was no version of this story where I needed to bluff. I told him I had already filed a formal complaint with the State Attorney General's Consumer Protection Division regarding the unauthorized loan, 11 days earlier. I told him I had retained Patricia Soto, who had already sent formal notice to the Trust's financial institution requesting a full forensic accounting and freeze on any further trustee withdrawals. I told him that whether I pursued the tax matter through an amended filing dispute or a formal IRS referral was a decision I had genuinely not yet made, and that the decision would depend, in part, on what happened in the next 30 days. My mother, who had not said a single word through any of it, finally spoke, and her voice had the particular brittleness of someone watching a story collapse that she had spent decades reinforcing. She said, "You're doing this here, tonight, in front of everyone, on the company's biggest night." My mother, who had not said a single word through any of it, finally spoke, and her voice had the particular brittleness of someone watching a story collapse that she had spent decades reinforcing. She said, "You're doing this here tonight in front of everyone, on the company's biggest night." Aunt Carol, to her credit, was the first person at that table to say something that wasn't a defense. She looked at the page detailing the trust withdrawals for a long moment, then looked up at my father and asked quietly, "Richard, is this true? Not, is this fair?" Not can we discuss this privately? Is this true? My father did not answer her either. Don Whitfield, for his part, said almost nothing about the family drama itself, but I watched him flip directly to the page showing the trust funds used as loan collateral. And I watched him do the math that mattered most to him, which was whether a company willing to misappropriate a family trust to secure operating capital was a company he wanted his own contract renewal tied to for another 5 years. He didn't say it out loud that night. He didn't need to. 2 months later, his distribution agreement was not renewed, a development the local business journal covered in 3 sentences buried on page 9, citing, vaguely, a change in vendor strategy. I told her I hadn't chosen tonight. They had. They were the ones who scheduled an inheritance negotiation on the same evening as a public celebration, presumably because they believed I would never risk the family's image in front of guests, the same calculation they had been making about my silence for 32 years. I told her that I had simply decided the calculation no longer applied. Theo, to his credit, or perhaps simply out of shock, said almost nothing the entire meeting. He flipped through the report slowly, landing longest on the page detailing the business loan collateralized against my trust, and at one point looked up and asked, quietly, "Was any of this my idea?" I told him honestly that I had found no evidence he had personally authorized or known about the trust withdrawals, the loan, or the scholarship checks, that the documented trail led specifically to trustee and parental authorizations, and that I had no interest in making him a casualty of a decision he hadn't made. I watched something shift in his expression when I said that, something that looked almost like relief, and something else, underneath it, that looked like the beginning of a much harder conversation he was going to need to have with our parents on his own. The journalist closed her notebook at some point during page 19 and did not open it again that evening, which I appreciated because I had not brought that report to embarrass my family in print. I had brought it because a public room was the only room left where the truth could not be quietly renegotiated afterward over a kitchen table, the way every uncomfortable conversation in that house had always eventually been smoothed over, softened, and buried. What I want to be honest about, because this story does not end with a tidy reconciliation, is what happened in the weeks and months after that night. Because the climax of a story like this is never actually the confrontation. The confrontation is loud and fast and over in 20 minutes. What comes after is slow and quiet, and that's where the real cost gets paid. My father did not apologize that night or in the weeks that followed. What he did instead was retain his own attorney within 4 days, which Patricia told me was, in its own way, an admission, because innocent people rarely lawyer up that fast. The trust's financial institution complied with the freeze request within 2 weeks and began its own internal review, which is standard procedure once a beneficiary formally disputes trustee conduct, and which ultimately corroborated almost exactly every withdrawal figure I had already documented independently. The State Attorney General's office opened a formal inquiry into the credit union loan within 30 days, which moved slowly, as these things do, but which never closed, and which 18 months later resulted in a negotiated restitution agreement rather than criminal charges, a decision Patricia explained was common in cases involving family identity theft, where prosecutors often weigh the practical likelihood of conviction against a defendant's advanced age and lack of prior record, even when the underlying conduct is unambiguous. My father agreed, as part of that restitution, to repay the $14,000 in full, with 5 years of statutory interest directly to me, a fact that I confirmed personally in writing, because by that point I trusted nothing in that family that wasn't confirmed in writing. The trust matter resolved differently and more completely, because trust law gives beneficiaries remedies that consumer protection statutes don't always provide. Patricia filed a formal petition for trustee accounting and breach of fiduciary duty in probate court. My father, facing a record he could not meaningfully contest, given that every withdrawal carried his own notarized signature, agreed to a settlement rather than a trial, restoring the full $117,800 to a newly established trust account, this time with an independent corporate trustee, a bank rather than a parent, managing it going forward. I did not pursue the tax matter formally in the end. I filed an amended return correcting my own dependent status history and let the broader question rest, partly because Patricia advised that the practical benefit was limited, And partly, I'll admit honestly, because by then, I had already gotten what I actually needed, which was never really the money. What I needed was for the math to finally be told correctly once, in a room where nobody could quietly edit it afterward. The furniture business survived technically, though not in the form anyone at that anniversary gala expected. Theo did become chief executive 6 months later than planned, but the 2 underperforming locations closed anyway, a decision driven less by my refusal to fund them and more by the simple operational truth that they had been unprofitable for years, propped up, it turned out, by exactly the kind of borrowed and diverted capital my audit had traced. Theo and I talk now, occasionally, carefully, the way 2 people talk when they're rebuilding something neither of them fully trusts yet. He has, on more than one occasion, told me he believes our parents owe me a direct apology they have never given. I believe him when he says it. I have stopped waiting for the apology itself. I want to be honest about something else, something I didn't fully understand until almost a year after that gala, which is that winning the audit, in the documented, legal, undeniable sense, did not automatically heal the part of me that had spent 32 years being told I was the responsible one instead of the loved one. I started seeing a therapist 4 months after the gala, not because of any single crisis, but because I noticed I was still flinching every time my phone rang with my mother's contact photo on the screen, even after I'd stopped answering those calls entirely. My therapist used a phrase early on that I now return to often. She called what I'd grown up with a transactional attachment style, where affection in a household is distributed based on perceived usefulness rather than unconditional belonging. Hearing it named that plainly, in clinical language, helped in a way that surprised me, because it turns out I process grief best the same way I process everything else, by giving it an accurate label and a documented structure. I also made a decision, about 8 months after the gala, that I had not planned for at the outset of any of this. I left my position at the forensic accounting firm where I'd spent 6 years building my reputation, and I started a small independent practice focused specifically on financial abuse cases within families, identity theft between relatives, misused powers of attorney, diverted trusts, the kind of cases most firms quietly decline because they're emotionally complicated and rarely lucrative. My first 4 clients came through Patricia Soto's referrals. By the end of that first year, I had 11 and a waiting list. There is a strange, quiet symmetry in spending your professional life helping other people produce the exact kind of documentation that finally let you be believed in your own family. And I won't pretend that work doesn't cost me something some weeks. It also gives something back that the 6-figure firm job never did. My mother and I have not spoken since that night in any meaningful way. There have been 2 phone calls, both of which she opened by asking when I was going to let this go, both of which I ended within 4 minutes, because I had learned, finally, at 32 years old, the difference between a relationship and a debt collection call dressed up as one. My father, through his attorney, communicates with me now exclusively in writing regarding the trust and the loan restitution, a formality I find, honestly, almost peaceful, because writing doesn't ask you to perform forgiveness you don't feel yet. I sometimes think about that binder, the navy blue one with its laminated label, sitting in a box in my closet now, because I kept it, deliberately, the same way I kept every exhibit from my own report, not as a trophy, as a reminder. They tried to convert 32 years of conditional love into a debt with my name on it, expecting me to pay quietly the way I had paid quietly my entire life, in attention I didn't receive, in credit I didn't get, in money that was never actually mine to give because, as it turned out, so much of it had already been taken from me without my knowledge in the first place. Here's what I would tell you if you are sitting somewhere right now, recognizing pieces of your own family in this story. Love that has to be itemized was never love to begin with. It was an investment strategy, and you are allowed to audit an investment strategy the same way you would audit any other one, with documents, with patience, with a complete refusal to accept a narrative simply because it was repeated to you loudly and often enough that it started to feel like truth. You do not owe anyone gratitude for raising you according to terms they secretly drafted in their own favor. You are allowed to ask for the receipts. And if the receipts, when they finally arrive, tell a story that nobody in your family is prepared to hear, you are allowed to read it out loud anyway, calmly, completely, one documented page at a time. in whatever room finally gives you no choice but to be heard. I closed my 41-page report. That night in the hotel ballroom, with a single line I had written weeks earlier, sitting alone at my kitchen table at 2 a.m, never fully believing I would actually need to say it out loud. I said it anyway, and I will end with it here because it is still the only conclusion this story has ever needed. You raised me to believe that everything has a cost. You were right. You simply never expected that someday I would be the one who knew exactly how to calculate it.